Okay, let's have a look-see here. It is 7:16. It's Thursday. It's Thursday, 12:38, so markets are still open at the moment. I have half of today off, and then I'm not going into the shop tomorrow. I've got plans for something else, so I wanted to take care of this today, and then because I won't be available to roll this out or do any works with it tomorrow. So today's Thursday, and we're just going to go ahead and do this. First, we'll start with MSTR, and then we'll look at some of the other things. So we have the new account here, and I already sent the $200 for this week. So instead of $600 from last week, we have $800 this week. It was just the $200 every Friday. Today's Thursday, but I did it anyway. So we have $200 here, and I'm going to go ahead and roll all of these out. So let's roll this, and I guess I have to do that. Let me do that on the phone, same as last week. So let me see here. Just give me a minute. Where is that thing? Here it is. Okay, and then this. Okay, so I did that on the phone. So now this one's ready. I am going to roll this from the 17th, the current July 17th expires tomorrow put, and I'm going to roll this to next Friday, and this is the $2 ones. So we're going to go ahead and do that. Right now it's 19 cents. Next week's is 27, so we're going to go ahead and roll that out. And we have one of those, and let's say, 6 cents is fine. It doesn't, mostly I just want it to roll. We'll go ahead and review that and submit. And done. And then we'll go back into here and see if it went through. Scroll up. Okay, so we have the 724s, and let's see what the price that it actually went through at. 25 cents. So it went through at 25 cents, and I forgot to look at the one from, what did I have? Oh, it doesn't even show it down here. Yeah, I think last week it went for 25 cents again, maybe? I'm not really exactly sure. I should have looked beforehand, but It had degraded down to 19 cents. I rolled it over, which means that I made like $6. Nothing spectacular, but we just roll it out until it expires worthless above $2. And so that's that. And then this one, the $4 ones, we're going to roll those as well. And so I'm going to roll this position, and we're going to roll it out to next Friday at $4. Here, this one, yes, continue. And we'll just do this one at break me even type of thing, and submit, and done, and then we will see if it went through. And so that one's just sitting. It didn't actually go through right away, but sometime between today and tomorrow it'll automatically go through on its own. So that's taken care of. And then what I want to do is that I have an additional $200, and so I want to sell one of these. So then I'll have two of them. So I'm going to sell to open, and I'm going to sell one, and we can do it. I think it said 27 cents. And review order, and submit, and done. And then we'll go to here to see if it went through there. Yes, and so we have two of these and two of these. And then this one's going to roll, and so that'll roll out to next Friday. When this one expires worthless, I sold them for roughly 25 cents. I sold two of them, and so I'll end up making roughly $50 off of this, which is how I protect the downside of the $4 ones. I can roll these for basically even. For for like make nothing this week, make nothing next week, but just maintain the pricing as it moves and just navigate that pricing while making $25 off of each one of these. That lowers the cost basis over time. So the longer it takes, or the more that it goes on, the more I'll end up collecting this $25 premium here that will lower the cost basis when I eventually do buy these $4 puts. And so now I have $800, and I was able to do like a 2 or like a 1-to-1 ratio, but I have 2 of these and I have 2 of these. It took 4 weeks to get there, but now I'm here. And so now I can pair these together, where if I say that I have 1 of these and 1 of these, and this one expires worthless and makes me $25, then by time this one finally does move up above $3, which is the area that I want to be buying at, I can allow it to execute and know that I made 25 cents off of each iteration of that each week, and continue to lower the cost basis. So now I have it paired 1-to-1 or 2 with 2, and I can do the same thing next week. I'll either sell a $4 put or I'll sell a $2 put, and then the week after that I'll pair it with the opposite, so that they're each working together, where this one just follows the price up or down, sideways, it doesn't really matter. This one will just follow it along the way, and this one will continue to collect a premium every week that it's over $2 to let me just collect that 25 cents. But that'll slowly knock down the cost basis of the $4 one. So right now, my average, if I allowed this to execute, my average would be $1.86. But if I remove 25 cents from that, it would be $1.31, maybe. And so I effectively paid $1.31 because I collected 25 cents off of a different put that I've kind of married them together. And so I can lower the cost basis that way. I had also made 25 cents off of it in week 1, and so now we could say after it expires worthless, we could say that I made 50 cents off of it, which gets us down to, oh, that's $1.36. The 50 cents is 25 cents is $1.51 maybe. Somewhere in there. Math is failing me, but that's okay. Either way, that's how that's going to work. And so I can lower the cost basis by collecting 25 cents at a time off of here, and knocking what it's eventually going to actually cost me in my dollars at the time that I do go to buy those. I will be able to buy more than eight sets of this at $4 for, say, $800. And so that's how that works. Now this is sort of operational at 2 of these and 2 of these. It took 4 weeks, but now it's sort of operational, and now it'll just continue to build. Next week I'll sell 1 of these, and the week after that I'll sell 1 of these, and now it's 3 and 3 and 4 and 4 and 5 and 5, and then one of those weeks it will move up and it'll get up above $3, and I can allow them to execute, and then that's when I'll start moving. But I actually won't do that once we get there. When we get there, I won't just let this execute. I'll move it up to a $5. I'll move this up to a $5 put and do the same thing, but I'm always protected and hedged before I even enter the position until it moves through the $3 range, through the $4 range, and it gets into that $4, say 30 cents, $4.40. I can let that $5 put execute, and I would have sold that at $2 or $3 plus the lowered cost basis that I have, that I'm still technically entering for an average under $3, and that's what I want. I want my averages to be under $3 when I do enter them, but I don't have any plans to actually enter and acquire shares until at least the break of $4, so we can have like that confirmation that we are moving up. I don't want to be stuck down here with shares, and I don't want to be stuck in this no man's land with shares. So I want to get through there, and then I'll allow it to execute, take those shares, get up above $5, and then just immediately start selling calls. So I'm never like pinned and trapped and just left holding it, waiting for something to happen. I can immediately move from selling those puts to selling those calls by just navigating through this no man's land in the middle that I've created for myself. I created this no man's land of where I want to exist at, below $3 or above $5, and I want to get through this range in here to properly navigate it safely. So that's the plan, and it's going well. I have these puts taken care of. I have these will roll out at some point. But that's that. And so now we will go to the actual charts, and I want to minimize that because I don't want to look at it. And I want to look at a number of things today, because earnings is coming up, and so I want to start prepping and planning for that. There is something to look at for Netflix, Microsoft, and Meta that kind of reiterates why I buy the way that I do. Netflix is really beat up. It's really low. And the expectation from here is that we want to get back up to the all-time highs of 134 and 150, while this chart still tracks in an upwards direction. It says that Netflix is a good company. Over time, over the years, it continues to go upwards, and stocks always go up. It's like the entire principle of everything that I buy is that stocks always go up. And so if this is always going up, and in this 3-year chart it's always going up, even though it has these downs in here, obviously, the entire premise is built on the idea that it will recover. And if it's this far removed from where it's traditionally at, then the potential value of what it's going to return to me is extraordinarily high compared to its years past, where only got to a half a standard deviation away. Now we're 1.5 away. It's extremely far away from where it should be statistically. And so this is the premise of what I buy under. With Netflix here, we're buying low, and we already know that it's low, and we already know that it's beat up, and we kind of already know the maximum downside. There's not really any mystery to it. We can enter it and dollar cost average for, I think, 10 months at this point, and still never have any real concern. There's not any real worry in my mind that Netflix won't recover and come back to at least a fair value and reasonable price at, say, 125. That would get us to the old all-time highs of 135, and then find like a 150 somewhere. Same thing exists with Microsoft, where there's a 20-year history of Microsoft being this kind of company, and always going up kind of company that always performs and always gives a return that'll be better than what you bought it in the past. And it doesn't really matter where you bought it in the past. You could have bought these all-time highs at 555, and it won't matter, because over time, in say 5 years' time, it will always return better than that 555, because that's the kind of company that Microsoft is. And so I can have confidence buying something this low. I want to point out the larger time frame on the monthly. I'm usually searching for like a when type of scenario, where you say a company is extended and has profited very well, and a lot of people have bought into it, and it pushed and climbed too high, far above what's kind of an acceptable price. If we called an acceptable price on Microsoft at $475 today, that this got so extended beyond that. And not only was it extended beyond that, it was extended beyond it in July of last year, when a fair price would have been $434. Just based on its own history and its own projected mean, that at that time when it was 555, it should have been $430. It would have been unpopular at that time to say, oh, this company's $555 and it should be $430, and so I'm waiting for a crash to happen so that I can start buying. It's extremely unpopular to say something like that, and I'm not generally hunting for things like that. I just take action when that actually does go on, when it does drop off. Then I say, oh, okay, well, this makes sense. The drop makes sense. And here we had this when, if I kind of zoom in a little bit here, we had the 200 come out through the Bollinger Band and kind of signal to us that there should be some large drop here. And so now, if we look at this and say, it was foretold beforehand that this should happen and that this should come to fruition and come out of it sometime in, say, August of 2026, which is kind of now, then I would expect this to start building out and coming back up. But that on this large drop-off all the way down to here, this should have been something that was expected before it even happened. And so regardless of the earnings or the news or the sentiment of what people are saying, this could have been seen beforehand, the same way that this could have been seen beforehand, back here in 2022. And so this is here on the monthly. Now, I don't like trying to bottom pick. I don't like trying to chase this all the way down and try to get the most perfect pricing. I look at it from like a perspective that it may not even actually reach this fully. You have this tiny wick here and this tiny wick here back in 2022, 2023. And so I just try to buy the bulk of the drop somewhere. This is like a half a standard deviation to a full deviation away. Somewhere in there is good pricing, but I just operate on a lower time scale, where on like the 3-year 1 week instead of the monthly chart, it gives an easier area to work within, where you see the drop come in and you say, okay, I'm just going to buy below this level. And so when this drops off and this falls down, and then I say, okay, let's just start buying at 400, at anything Microsoft sub 400 or anything Microsoft sub 425. We just start acquiring all of these shares every week, DCAing in, expecting that Microsoft will reclaim its trend and back to the mean. And then when it gets well above and overextended over the mean, that's where we'll look to unload it. But if it doesn't actually get up here and overextended, if it just gets to the mean and wants to track sideways and offer fair value, then we can just sell calls up here and let them expire worthless and collect the premiums every Friday. So either way it works, but the entry positions are much safer to get into. And so what was that? 420, what did I say? 425 to sub 400. So somewhere in here, that would make it something like 1 standard deviation away or below is a pretty good entry position for Microsoft, expecting it to return to the mean up here at 461 and overextend to 488 or 518, look for new all-time highs at 560. So I want to enter there. Now I'm pointing that out because if we pull up something like, let's just look at Netflix and let's look at Meta really quick. If I pull Meta into there, it has this when that's coming up on the monthly. I don't know if we'll just catch a wick in there, if it'll just be like a tiny wick like Microsoft's from 2022. I don't know. But we can expect pricing to try and find something in the 540 region. But either way, I just want to DCA all of this because the price is getting knocked down and it's kind of signaling that it wants to come down here and at least get a wick in there to satisfy the inventory that's kind of been left over from all of this building and climbing that it's been doing. So, same premise applies here with Meta. Now, if it doesn't get in there, that's fine. But this is why I start collecting shares here, is because I just expect a drop, and then the drops happened back here in, it was November. Yeah, in here, it dropped off, and then we started buying. If we look at Netflix, under the same condition, we have this when that's popping up here, and so it's coming down to meet it. That if I start buying more Netflix, which it actually has earnings today, so I'm done buying Netflix. I want to see what happens after earnings. But if this comes down, it cleans up this when, signals it, and says, hey, there's proper selling going on, and it's for a reason, and that reason was said all the way back here, all the way, signaling that it was going to happen as this traveled sideways and the Bollinger Bands came up, then we can start finding a bottom here and expecting it to come up. But I say all of that to look at something like MU, or not as TSM, extremely overextended. What's the other one? AVGO, extremely overextended. That I would start watching these, because I know that these are popular and that other people are kind of jumping in them because they're hyped and popular and really getting pushed and really getting stressed out, is that I would watch this on a larger time frame and just be cautious of when these are going to come together and start signaling some kind of when that says this is ready to come down. There was, what is that one called? CoreCivic, CoreWeave. Doesn't have enough history to even have a real chart. What's the other one? It's Taiwan Semiconductor, NVIDIA. What does NVIDIA look like? NVIDIA kind of has it happening right now. There's this when right here that I would be cautious on NVIDIA. Not that you have to be like overly cautious, but there's a when signal coming here that's telling us that there is a very large drop-off expected for NVIDIA. And does this show? It doesn't. Does this? Oh, stock highlights, perhaps? What's the PE ratio? So NVIDIA right now is a PE of 32. If we look at something like Microsoft to speculate what this kind of drop-off could look like on NVIDIA, or Micron, Taiwan Semiconductor, all of these really hyped up semiconductor stocks that are really pushing to the moon right now, eventually they'll fly too close to the sun like Icarus and they'll just fall over. So if you want an expectation of what it would look like, it would look like Microsoft right now, where it gets extremely overextended. NVIDIA would. It would get extremely overextended, extremely overbought. Everybody would be super hyped about its moves, which they are currently. And then it signals that when, and it all rolls over. And on Microsoft, the current PE is 22. So if we speculated that out for what could potentially happen with NVIDIA, is that 32 down to 22. If we did the rough math, is 10% is 3 on 32 would be $3, or it'd be like 3.2. 32 gets us to 29. 3 more dollars gets us to 26, and 3 more gets us to 23. That's a 30% drop. So if we speculated a potential 30% drop coming on NVIDIA to get it to 23 and have it look similar to what Microsoft is going through right now, then a 30% drop on NVIDIA right now would be $60. If we took $60 off of 206, it put us at 140. And this is signaling down here somewhere at 113. It could come up and come all the way together eventually once it, finally gets through and comes out the other side. It could very reasonably happen right here at 140. This isn't too outside of the realm of possibilities, that you could very realistically see a 30% or a 40% to get us down to this 100 to 120 type of area. You could see a 30 to 40% drop off on NVIDIA without it becoming too ridiculous, without looking at it and saying this is unfair pricing and this isn't like, this doesn't make any sense. It very much so could, because a 32 PE down to a 20 PE is a 40% move. And that's currently where Microsoft sits. If we look at the Meta move, where Meta had dropped off, its current PE is 20.81. What is Netflix? Its current PE is 31. So Netflix could even, in theory, drop off another 30% and get down to like a 20 PE. This is extremely beat up, but it's possible that it could settle at, say, a 20 PE, drop off another 30% more, and that's going to be $21. And you could, in theory, see a $50 Netflix. Do I think that's going to happen? Not really. But this when is still there, in here, and that when does say that it could be somewhere at like $63. So is it possible? It's possible. And could it drop all the way off from its highs of 134 all the way down to $64 and cut 50-60% out of its all-time high? Very much. But that's not exactly what I'm pointing out. It's that NVIDIA very possibly could do that. Or CoreWeave here could very much so do something like that. NVIDIA, we already did NVIDIA. Taiwan Semiconductor, TSM, could very much so do something like that. What's the PE currently on Taiwan Semiconductor? 23. So long as their earnings actually for TSM, so long as their earnings maintain and they stay good, I could say that a maximum of like 10%, maybe 20% down is available for TSM. That even though this is very, very high and very overextended, it's not according to their own earnings, to who they are as a company. That you could cautiously enter at 10 to 20% down and expect that as like a reality that could happen. And 20% is $80. So if we took 400 minus 80, we'd be at 320. 320 is down here, and that's half a standard deviation away. That's not a terrible downside, but it also still maintains its long-term chart where, this is pretty much on the mean. This is pretty much on the mean, a half a standard deviation away. That it just got so extended here, which is what's going on today. A lot of the news is centered around this, that all these semiconductor stocks are really dropping off. But it's not that unrealistic. You could see this down to 320, a half a standard deviation below its mean, and be very fair and very realistic in the reality of who this company is, and still have a 20 PE ratio. So it's not that bad actually for TSM. AMD, extremely overextended. Like this, I would actually like to see this down, and see it down to at least like 250, potentially 200, but it's really going to depend on what their earnings are, how their earnings turn out. And they're sitting at a PE ratio of 67 right now, extremely, extremely overextended, unlike the hype news of the last year and their progress as a company creating infrastructure and data, what do they call it? Data centers. So if this is at say 70, and it would be much healthier to see this down to say 35, but just because that's easier math, divide it by 2, divide this by 2, we get to 250. If 35 is still kind of high, and we want to be buyers somewhere at 20 or 22, 23, 24, then even from 35, you could see another 60% drop off. So if we take the current 500 today, divide it by 2, bring us to 250, and then from 250, take another, say, 40% away from it. 250 would be 25, 20% would be 50, so another 40% would be 100. That if you saw NVIDIA down at 150, then it's starting to look a lot like the year that I just jumped all over it, where you say this price is now way too low. It's sitting at like a 20 PE ratio or an 18 PE ratio compared to its peers and compared to all of the other big contenders in the tech sectors. An 18 to 20 is far, far too low. We have to start buying this. And that's the kind of things that I look for. I don't like buying up here on NVIDIA. I don't like buying, their 3-year 1-month chart actually doesn't look that bad. Their charts don't look as ridiculous as this 236 did previously. So the example doesn't even really work that well anymore with NVIDIA, but it did previously, a year ago. So a year ago, or let's just say in May, because that's actually only 2 months ago, it's had that big of a drop off. But 2 months ago at 236, it just looks extremely overextended, and I don't like becoming involved in things this high when the threat of that downside is so far. If you could buy it here, and then the threat of the downside is down to, say, 175, or what did I say, 140 on the larger time frames? I mean, we can still look at like 165 type regions here on the 3 or 1 week, that I don't want to be buying at 230 up here, catching all of the hype and all of the funsies with the guys that are buying here. I want to buy it down here, even if it is getting beat up and getting low and getting whatever happened back here in April of 2025. It may not be as popular to buy it here. It may not be as fun, but this is where I want to be. And there is the potential for something like NVIDIA to have that coming soon. From, say, $85 up to like 140, I think it was, somewhere out here potentially. And if it goes to 160, and then I say, okay, everything sub 160 is a buy on NVIDIA, like that's where we want to be, then that's where I want to be. And so with earnings coming up, I want to keep those kind of things in mind, that I want to find the loser. I want to find the Microsoft of earnings. I want to find the Meta of earnings. I want to find the Netflix of earnings. Whoever comes out the loser, where we have Netflix, we have Microsoft, we have Meta, and now I have not Bitcoin, but MSTR. I want to find the solid, reliable companies that I can build some kind of faith or trust in the long term, and say, these guys are extremely beat up and I want to buy them. And then when I buy them, I acquire as many shares as I can, dollar cost average from Friday to Friday. And then when it comes back up, and we have like an MSTR somewhere at, say, 396 up here in the overextended area. We have it at 396, $400 on MSTR. I want to sell calls, and I want to sell calls out of reach and out of the money that give me and pay me a premium when they expire worthless every Friday. And if that call, if we just looked at it right now at $100, where's the options? So if I look at like next Friday, let me make this much smaller. I don't want to look at that many prices. I want to look at more of that though. I want over 100. It's still not that many. I guess we'll go to all. So I want to look at something that's like over 100. Not that I'm actually going to buy this, but this is the general idea. That at 94, if I was to say that a 10% move in a single week is a very large return, and if that happened, I would be willing to take the profits, especially when we're talking up here at 400, 500, where I'm already massively profitable. So if I pretend that this 100 is actually 500, but at 95, we're going to add $9.50 to it, and that will put us at 108. What's 94, 103? Yeah, 103. So then if I look at the pricing here at 103, the calls currently sell for $2. $1.76 is the ask, or the bid, and $1.95 is the ask. So call it $1.80 for simplicity's sake. Every 100 shares that I acquire of this, later at $500, I could sell a 10% up call out of the money and out of reach for roughly $2. Now it'll be worth much, much more at 400. At 400, a move from 400 to 440 is a 10% move, and I would sell the 440 for like $2, roughly. It's still the same percentage type of move, but to go from 400 to 440 is a huge move. So it's out of the money, it's out of reach, and I wouldn't expect that to be attainable in a single week, and so I expect that to expire worthless. If it expires worthless, I collect $200 for every 100 shares that I was able to sell a call on. I take that $200 or 400 or 600 and I buy the new loser. And so that's how I fund the buying of currently MSTR, Microsoft, Meta, and Netflix. That's how I fund that every Friday. Is that the calls that I sell on the other companies that I have that have already gone up and that I can sell out of the money calls on, I collect my $200 or 4, 6, 8, 1,000. I collect however much it is, and you slowly build that over time. So we're slowly building MSTR, we're slowly building Meta, Microsoft, and Netflix every Friday, dollar cost averaging in and acquiring shares. And if it takes 10 months, it takes 10 months. But 10 months is a lot of Fridays. And so in a lot of Fridays, I can collect a lot of shares. And of those, if I have 100 shares, 200, 500, 1,000 of each of these, then by time it comes to sell calls, now let's say I can sell 10 calls on MSTR at $2, that's $2,000. 200 for each one, that's $2,000 just on MSTR. Now let's say I have $2,000 that I can collect every Friday on MSTR, $2,000 on every Friday off of my Microsoft shares, $2,000 off of Meta, and $2,000 off of Netflix. That is 4 companies times 2,000. That's $8,000 that I collect every Friday. And then I can apply and fund whoever the new losers are every Friday with $8,000. I can distribute it to, let's say, Taiwan Semiconductor comes down, Nvidia comes down, Micron comes down, AMD comes down. That's 4 companies. They've all gotten crushed and they're all super low. They don't have to, and I don't have to be right, and they don't have to come down. But if they do, I can start delivering capital to them, buying them when they're low with very little concern that I'm just throwing away $8,000. I am slowly acquiring $8,000 worth of this every Friday for 10 months. And that, then that starts to grow. It starts to really stack up into meaningful amounts of money. And so that's kind of the process, but it's also why I don't like buying, say, Nvidia at 230 3 months ago, because the threat of the downside, whereas this has a threat of a downside, but the downside's kind of known. It's maybe 10%, 20% down instead of 50, 60, 70% down. I don't want to catch a 70% down move. I want to watch it happen, see it, be aware of it, and then when it hits some kind of threshold like sub, 400 on Microsoft, then just start buying it and just buy it every Friday. So with that in mind, we do have earnings coming up. Netflix is going to be today, and Meta and Microsoft are going to be the 29th. So we'll have earnings on Netflix, Microsoft, and Meta. MSTR doesn't really have earnings, like they do, but it actually doesn't mean anything. They're just they're kind of just tied to Bitcoin. So we'll just continue to watch Bitcoin and see if that rotates up. But we have earnings for Microsoft, we have earnings for Meta, and we have earnings for Netflix coming up. We want to see this start to climb up, start to gain some value, start to return to the mean, and then we can start selling calls. And when we sell those calls, after earnings, we can figure out who the loser is. We can figure out if it's Apple. Maybe Apple gets crushed. It's overextended. It's at $330. We wake up after earnings. When is their earnings? The 30th. So we wake up on the 31st or August 1st or, August 5th, a couple days down the line. And we wake up and we find out that Apple had bad earnings and they're sitting at $265 or $250. And we say, okay, that's where my funds are going. So earnings is coming up. We're starting to get prepared for it. We're going to see who the new loser is. I don't really have any predictions. I don't know who it's going to be. But if it's Apple, then we can start buying Apple. Something sub 250 looks like what my previous marks were. So something sub 250 would be cool. Potentially we see Google drop off. We see Amazon drop off. We potentially see Tesla drop off. I actually have no idea. I don't know who it's going to be. But whoever the loser is on the other side of earnings, if one of these come up, because we've also gone through 3 earnings now with Meta, Microsoft, and Netflix. So if these do return and they get up to like a reasonable, fair pricing, we are solidly green and profitable, which we all should be at this point on all of these. But if we are all profitable on these, then when it goes up and we hit like 875 on Meta, we start selling calls, and those calls expiring worthless and out of the money will fund whoever the loser is coming up this earnings season. And then for the next 12 weeks, potentially, obviously it does last longer than that. It's been 9 or 10 months for these three, but for the next 12 weeks going into the next earnings, or 12 weeks after that going into the next earnings, which makes it 3 months or 6 months or 9 months, we go into those earnings, we find the loser, and we just buy them. And it's funded by the losers of the past. The losers of the past climb back up because stocks always go up, and when we can sell calls off of them, then those calls and those premiums fund the buying of the new loser that will be coming soon. So just as an awareness, in 2 weeks, 3 weeks, earnings is coming, and on Netflix, earnings is actually today. So I'm going to want to, watch that and see what happens with it. But that's something I'll do on my time, after hours at 3 o'clock. Expectation is 78 cents, and so we'll just see what happens. But either way, Netflix earnings, it's signaling here that there's a when that it wants to start climbing out of the gutter. And then in 2 weeks, we have Microsoft is also signaling that it's ready to come out of the gutter. We're already seeing it start to round out, same as it did here. And so if we see this round out and start to climb up, that would be great. And same with Meta. It's starting to climb out of the gutter. If it gets through here, it's kind of had resistance here, and this is where I had sold calls previously. I had just sold calls up here and up here. I didn't sell them this time because we have earnings come, and I don't want to get caught up on that if it does actually make its move. So I'm just patiently waiting on Facebook to make its move, or to wait for after earnings. But we're set up well. We are set up well for Facebook earnings, and we are set up well for Microsoft earnings, that it looks like it wants to do some kind of pre-earnings rally and get there, and then we'll see what happens afterwards. So that'll be the 29th. And Netflix today, it's signaling the when. The when lined up really nicely here with today and this week's earnings, that, I'm expecting this to go well. Whether they beat or they miss earnings doesn't necessarily matter that much. It's whether or not the sentiment changes and people, the theys and, of the world, decide that Netflix is now favorable and we don't hate them anymore. Which is mostly what it is that, the mystical people of everywhere's today decide that they hate Netflix, and so now it's the loser and it's going down. Eventually people won't hate Netflix and it'll go back up. So either way, it looks like that's coming soon, and today is earnings, and this is what we've been waiting for, so we'll see how that turns out. And yeah, that's it. Just preparing for earnings. Explaining the setup, explaining, what the plan is and what all of the buying was for going into this for the last, say, 10 months or 9 months. It's all for this reason, that the losers will eventually not be losers, and they'll come out of here, we'll find some good pricing up here, and then we can sell calls, and those calls fund whoever the loser is of now. Whoever loses on this earnings or next earnings. Whoever the world hates at that particular time and has all the bad news and all the bad stuff, then that's who we buy. We buy the loser of this time. So yeah, that's it. That's the video.